26th of May, 2023, Friday. All right, MAO of Cal once again. White House seems ready for something positive. Now, this is the latest ongoing rumor that's coming out from all the small little pipes around the market, all right? So the thing is this, we all know that McCarthy doesn't want to take the blame, that's for sure. But the thing is that for his position right now, seemingly his Republican colleagues are not very happy. They want him to stand firm with his current view right now. So now, most likely, if Biden really wants to get this thing over and done with, Biden needs to step back. So probably something will be done pretty soon. In fact, I saw there's some news saying that there's only $70 billion left of deal to talk about it. And if they can sort that problem out, there could be a bipartisan deal coming up. So let's just watch this very closely. And there's some news saying that by Friday, which is today, all right, it means Saturday for Singapore, by Friday, US afternoon time, this deal will be out. So traders, you need to be careful on this, okay? All right, so disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, guys, we're going to have the commemorative video very, very soon. I know that we've been waiting for this. We really want you guys to come on board and watch this video. It's going to be a short one, about less than 60 seconds or lesser than that. This is for us to thank you for the 1,000 subscriber. You just need to watch and listen and then put a comment there. You stand a chance to have a great lunch out with me, all right? And this time around, the people that we are going to invite will be more than the usual numbers, okay? So watch out for this video. It'll be out shortly after my MAO video. All right, so now the thing is this, the tryout period for the TCS is over, guys. Today is the last day, so it's over. Will there be another tryout period? Well, maybe not now. Probably will be in July or even August, okay? Not confirmed yet. But we really thank everyone who really like it very much because they really find it very amazing. They find it very versatile. They find that with the indicators right now, they can trade really with it, very simplified version of it. And all you need to do is just follow, put on some effort onto it and make it simple and make it easy for people. So you can see that we have a lot of people coming in and they really capitalize whatever they learn. And of course, they use it. No doubt it's all right. The risk and reward is really the main driver. That means that the risk is always 1 and the profit can be 3 to 4. And that's why many people likes it. All right. So guys, if you want to test it out, probably wait for a while already because we have given you a lot of time to talk about this. But if you procrastinated over the last 3-4 weeks, then maybe you need to wait for a while. Yeah. Now, because I really give my commitment to everybody, see more than 170 people come on Facebook, and I've been giving daily market review morning and evening. Now, I'm probably the only Singapore trainer that does that. Now, a lot of trainers in Singapore right now is giving indicators for free, right? Yes, I am not saying that I'm not giving for free, but we gave it, but we will charge you later. But more important thing is that I'm pretty sure they don't do daily 2 times a day review session, and I do that. So that really put me different level with the others. So all I can say is this, guys, try your best. For those who are already subscribed, do your best in trading. Your success is my best reward. Now let's discuss what happened last night over the US market. Well, the Dow Jones basically ended flat, but the NASDAQ up by 335 points. Wow, amazing. S&P up by 36 points. Now, what actually happened was because of NVidia up by 24%. Oh my goodness, this is really insane. And of course, this all the AI business model, and that basically spill over to Microsoft up by 3.85%, and of course Google by 2.13%, and Meta up by 1.4%. Now Apple is not into AI, so that may only up by 0.67%. But the thing is this, can this NVIDIA craziness continue? Now, this is something you can see before in Tesla, whereby everybody buying Tesla as if that electric cars is the next thing to go. But nowadays, you don't see anyone talking about it anymore. So would AI become the next bubble? Well, it is possible, but at least not for now. So what we have right now is that we have the NVIDIA better than expected, stronger than expected revenue guidance and up earning beat, and that basically push the share up by 24%. And of course, we also know that basically now everybody feel that there's a chance there'll be progress made between Biden and the congressional leaders. And apparently the stakeholders is needing to agree to just a $70 billion spending. So this is really very small compared to the 700 billion or even the 1 trillion talk previously, right? So maybe we may see something over the weekend. Let's see how it goes. All right, so one thing is that yesterday we were talking about the probability of having this rate hike coming in. So yesterday during my sharing my MAO, right, I tell you guys that the Fed fund rate was 63.5%, staying as it is, but there's 36% expecting a rate hike. And now, as of today, it has went up from 36.5% to 39%. So again, more and more people is expecting there'll be a rate hike this coming June the 14th, all right? So I believe so. My hands is up. I believe 14th of June, 26th of July, these 2 dates, there will be a rate hike. Now, of course, Germany has came to a point whereby now has basically come to the point that whereby we said before, there's a very high chance Germany will get into a technical recession, and it really has happened, all right? So Germany enters a technical recession because of the first quarter GDP data is being revised lower, right? You can see from the screen. All right, it's a technical recession because now the GDP has dropped from 0 to minus 0.3. This comes after Germany recorded a 0.5 contraction in the last quarter of 2022. Now, 2 consecutive quarters of negative growth define a technical recession, and this is what is happening right now. So if Germany is coming off, right, this without a doubt itself, there could be more downside to go. But the thing is this, if Germany is having a problem, right, the next one on my watch list will be UK. So in fact, right, UK FTSE itself, right, is in my watch list. And if you look carefully now, FTSE has to hold above 7,500 for the index because that is the moving average over here. This is going to be very, very important. And you can see that the last time when the FTSE basically hits my Fibonacci, it stays there at 77,000 level. So this time around, 7,005 will be the very important technical point the market has to hold. If not, it's all right. This will have a spillover effect over to the US side. All right, so this is something that is very different from what we see, but I'm basically watching this very closely. Now, the US economic data definitely is not doing well. You can see the year-on-year changes in S&P 500 in the Conference Board leading economic indicators, the LEI, is showing a very strong divergence, right? You can see right now the S&P is moving downwards for the the year-on-year indicator is coming downwards, but S&P is going upwards. Now, why is it happening? Because there's a lot of buying on those technology companies like the FANGs, and that is the one holding the market. It's not allowing it to do normal stuff. Now, of course, some people are arguing that maybe we'll see in year 2020, whereby the market rebounded like this. Don't forget, guys, that was because the time this Jerome Powell pumping $4.5 trillion to the market and caused an incredible inflation. So now we've got the inflation want to be curbed down and no money printing at the moment. What do you think will happen? I don't think it will move the same. And do note, the manufacturing durable goods orders are really very, very near to the negative zone. And of course, based on what we see in history, once we go to negative, we will see the recession coming in. So because the recession is on the gray area, so once this goes below the 0% level, basically it's as good as telling you that recession is on the cards. And I believe that, again, I said this many times, I believe by August to September period, we will actually see recession coming in for the US, all right? I've been saying this very, very repeatedly, and I think that I'm getting nearer, closer to what I believe, all right? So the S&P 500 right now is definitely being held up by the AI, all right? The AI is basically, this AI sector now is really the one that's holding the entire S&P 500, all right? So you can see right now, the market's supposed to come down already, but because of the holding up, every time when the market comes down, they're coming to buy and save the day at 4,100. So that means that 4,100 now is a very critical support level for the S&P 500. If the S&P 500 cannot hold above 4,100, then the selling will bring it down below 4,000, okay? So that's what everybody is watching very closely on this right now. But interestingly, yesterday, the volume was higher than norm. So that's the reason why I kind of feel that something may happen later tonight. All right. Now, one thing is I want to bring in Jim Cramer again. Now, yesterday, I covered Jim Cramer. telling you that he's the best in Wall Street. Some people actually laugh at me and say that, Kel, are you sure he is the best? Now, please understand this. The word best I use with a inverted, right? So the thing is look at Jim Cramer, okay, make it more specific to you. Jim Cramer says that he will not take profit on NVidia when it was at about 300. That was in December 2021. Because he said that this counter will go to $10 trillion in one day. Wow, that makes a lot of people very bullish, right? Then after that day, he said that the NVIDIA share from 300 damaged down all the way to 120. And that's why he says that why he short NVIDIA. And don't forget, when you say you're on a short was trading at 130, that was a day whereby, they were the period whereby NVIDIA went on the lowest of 106, and then after that rebounded. So I'm very, very skeptical of what this Jim Cramer say. And of course, right now, when the NVIDIA shares back to 360 level, he's saying that, oh, NVIDIA, I didn't name my dog NVIDIA for nothing. Gosh. I mean, this type of guy is on CNBC, no responsibility towards whatever he say whatever he says. Oh my goodness, if anyone follow him as well, right, you'll be so dead with NVIDIA. But again, because of that as well, right, we can look at the NVIDIA share again. You can see how wrong he was throughout, right? So the thing is this right now, we can see very clearly the S&P 500 now is really held closely, probably because of NVIDIA, all right? So this is something that I got from internet is so cool, this is so interesting. But the thing is this right now, when back in this last year itself, when everybody said NVIDIA will go down, it has went up, and now people are revising target to $600. Now this counter is at 394.95 as of yesterday, the highest point, but yet there are houses looking at 600. This is the same thing that what everybody did for Tesla. Now I cannot deny that, right? As long as this counter don't pull back too much to 300, yeah, maybe it may go there. But like I say again, guys, I'm not going to chase after this. AI is an interesting thing, but I don't think we are ready for it right now. And to me itself, maybe a good pullback, then we buy some NVIDIA will be a better idea. All right. So let me just bring it in. Now, we also know that JPMorgan has been stacking in with onto NVIDIA. You can see that in their latest 13F5 filing, they bought in some NVIDIA. And you look at the number itself, right, they bought in quite a fair bit. In fact, they bought in as much as 31% of it itself. Wow, that's a lot. So that means that they know what they're buying. They also bought some Meta recently. Okay, Meta also rebounded. So let's see how it goes for JPMorgan. We all know JPMorgan is one of the top broking company investment banks in the world. So maybe there is time whereby if next time that's going to pull back in NVIDIA, you should know what to do, yeah? All right, so the thing is this, if JPMorgan is so accurate in stock market, then how about their gold position? So apparently right now, right, remember there's ongoing speculation about JPMorgan holding a massive position on the short side on gold. But of course, until today, that we cannot find any validation to it, except that they're the biggest deliverables of the physical gold during the expiration. So usually those who deliver the gold during physical is usually the one who's short, right? So that's my point. So the thing is this right now, gold seemingly is now heavily watched. Now, if there's going to be any form of default, definitely that will damage the US dollar status, and that will bring gold higher. But again, on the same side, do note, we have said it before, when the stock market is coming up because of whatever reason, gold gets sacrificed first because there is value there. Then after that, we will see the upside. So I'm going to say this upfront. Gold 1948 will be a very important level for us, for the cash market. If gold can stay above 1948, we can see going back 2070 again. But if gold cannot stay above 1948, then expect 1840 in the near term. So you'd ask me as well, right? If the gold can come down lower to 1840, will be the better deal because we can buy it cheap. But if gold starts to move higher, right, that give me a very feel that something wrong may be happening soon. So that's why, guys, watch gold very closely. This could be the one of the game changer. And of course, while NVIDIA is doing so well, Intel got hit. Why? Because if you don't want to move with the world and everybody's going to AI, you have to be left alone. So that's why NVIDIA, AMD are doing very well right now, but Intel is coming up. So you can see the heavy selling in Intel, and likelihood Intel will be going down lower and looking at $25 coming in. And of course, that will actually cause a bit of panic selling across the board. And that's why I feel that this is going to happen. Now, let's talk about the US debt ceiling. Now, the thing is this, we all know that now McCarthy is really heavily watched by his colleagues. because they want him to firm on his view, because you can see that although he is saying a lot of things about Democrats, but he actually at the back itself, he actually says that, you know what, things are still going fine. So the thing is this, his colleague want him to say something more negative in a way, or more threatening, so that you force Biden to step back. So, you know, if you're in his position, right, if you say something too nasty, then that will create a mayhem in the market. Then, of course, things will get very bad. And for him and all his rich friends, they will be affected. So how can he do the type of things? So that's the reason why right now, right, Fitch is putting US rating on negative watch as a debt deadline looms here. So Fitch is one of the rating agency, and if they do that itself, right, this may not be good. So that's why I don't think so that there will be a default, all right? But of course, very clearly, we know that Yellen have been warning and warning about no money, and she's basically telling the market now, if you do not get this thing done itself, right, we may not have money to pay a lot of people, including the government officers, and most important, the people who basically bought the US bonds for interest. Yeah, this is going to be a big one. So now we all know the lawmakers are all trying their best to blame each other, but end of the day itself, right, we really had to watch what White House come out later today. Now, thing is this, again, to bring it back to Jim Cramer, right? So why I bring it Jim again? Because Jim Cramer is such an incredible, what do you call, lamb, to put it this way. Right, whatever he calls for buy, the market comes off. He calls for sell, the market comes up. Now, not every time, but I can safely say out of 10 times, he's like 8 times doing that. So with what he said, again, I couldn't find this tweet, yeah, extremely confident that US is going to default, right? Then I can just tell myself maybe may not happen. Because recently, right, he said that FRC is a new focus, a very good bank, and the time FRC was down by $100 from $240, then what happened? FRC collapsed all the way to $4.50. Oh my God, to be 95% wrong itself. Imagine you are an analyst on the TV. Oh gosh. So, oh dear, sorry, I think there's some PowerPoint issue here. Just give me a moment to back it up a bit. Oh dear, sorry, my bad here. Okay, so now the thing is this, there seemed to be a possibility of a slimmed down US debt ceiling deal taking place, right? Some sources that this from Reuters, okay? So whether it will happen or not, right, it'll be good if it actually happened. So Joe Biden and top Republican lawmaker Kevin McCarthy are aging close to a deal, and with just $70 billion apart from the discretionary spending, according to people familiar with the talks, right? So it's not confirmed yet, but seemingly they want to settle it before the holiday, and they think that if it can be done by Friday afternoon, which is later on, this could be good. So we can see that it doesn't care whether you're Republican or you're Democrat, they all spend money. So there's no better party involved here. All of them basically have screwed up the Americans in one way or another. So all I can say, guys, is if this is going to continue, all right, if today, Friday, if the market still couldn't get what they want on Monday, Tuesday, there could be some serious selling. But if they get something, maybe something good, the market may reverse again for the buy side. The long tail yesterday, the volume yesterday, things may be happening. So let's see how it goes. This is Cal signing off. Take care. Have a great day. Bye-bye.